Morning traders, welcome to the Traders Lab. I'm your host Tom B. Thanks for visiting the lab today. I stream live Monday through Friday, 11:30 to 1 p. Eastern Standard Time, and the Trader Lab's available to everyone at no cost. And if you're visiting in YouTube, there's a link down there if you want to visit Trader Lab. It's a community of like-minded traders who come together to leverage their collective experience. This is about the business of trading. There is no holy grail, but what there is in trading is understanding the business you're actually attempting to be in. Trader Labs exists to help traders bypass the typical pitfalls of chasing the holy grail and the only one thing you need, and differentiating potentially their outcome from other retail traders. And as you guys probably know, most retail traders are not able to create sustainability or a career path for themselves in this business. Part of that has to do with being misinformed about what the business actually is. The business is a gaming business. It's built on the same process that is successful for casinos, and that's actually building out trade plans that have a statistical edge and developing the discipline to execute that edge, which is not natural to us. Now, so how do we do this? Well, the way it is done is, at least in my opinion and experience, which as you can see is about 46 years of doing this, is built on probabilities, discipline, and developing a plan that has an edge that favors you, not trying to fit the plan or the business into what is comfortable for you. Discomfort is part of this because the market is 100% random 100% of the time. Now, I understand we want to predict and know and confirm, but those are psychological needs that are really primal in the sense of how we survive the apex predators, and that is be sure there isn't a predator behind the rock. Get confirmation that we're not going to be eaten alive. And our primal wiring cannot differentiate between the unknown or the randomness of the market and the predator. So chemicals flood our brain, cortisol, and we're in a heightened sense of awareness and fear, and we're looking to protect ourselves. So that's quite contrary to what we need to do to operate in this random environment. And remember, the casinos pay the gamblers, yet they have a net. So how do we do this? Well, the tools that we use in the Trader Lab, and it's not limited to this, and it doesn't matter how long you've been trading, is auction market theory. That is, how does the market work? Do you know how the market works and why we even have a market? How does the market work? Why does it do what it does? How can you get in alignment with it? How can you build out structured trades? And how can you use order flow to help create an edge to help you execute and also read in a more microstructure the subtle changes in the market that might give you an advantage over other traders who are just using plug and play indicators? Something for you to think about. And again, welcome to Trader Lab. General disclosure, all Bookmap Ltd. Materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember, this is not a trade calling room, but if we get there, we'll talk. This really is about the business of trading, and I like to start at the beginning. Really, what's the beginning? That is the condition of the market, a trade plan for the specific condition of the market, and then I will discuss structured trades that might be appropriate in the condition. The other aspect of this is, how do we monitor for change of conditions and then adjust to it with different trades that are only qualified based on the condition? So one size doesn't fit all. And I know we all want plug and play, and then you get the guys to move the ATM in the basement. But the reality of this is the market is not a generic process. It is a dynamic process. So when we talk about extracting statistical edge, where can you even start with that? Most of us are not skilled. We just are pushing the button, and our mind tends to see patterns that have no edge, but they have random winners. If you look in your toolbox, in your software package, your higher time frame, why are there 100 indicators in there? Have you ever thought about why? Is it that they give you all these indicators and now you just find the right ones? You spend your the time and maybe even assets you have, curve fitting and trying to find that mix in that time frame. Have you ever thought that maybe every person, every developing retail trader has walked in your shoes before you, has done the same thing, yet the failure rate is high? Over 90% is what I understand. Why is that if everyone's doing the same thing? Do you think you're going to find the magic mix or the one indicator that the Instagrammers and the quote influencers will tell you about in YouTube or the chats? Maybe that's not the answer. Maybe that's actually the problem. Now, how do you do this? Well, maybe, for an example, Bruce has a pilot program, and it's the basis or fundamental idea of how to extract an edge. You need to understand what edge is and how to extract it. Bruce's pilot program might go a long way and get you on the right track. Also, speaking of the right track, you can earn 3 months of Global Plus for free. All you have to do, and you use the hashtag FreeBlueJacket, and you can have a chance to win over $600 in subscription value. That's the Global Plus and data. And you also get the coveted Blue Jacket. By the way, this is very cool, this hoodie. I'm in Mexico in the mountains, and to give you an idea, in the morning it's 55 degrees here, a bit chilly, and then it goes up to 81 or 82. Kind of an interesting range of temperature. So I'm out here walking around in Mexico with this, and it's really nice, and of course it's comfortable. So get those in, and if you're in Trader Lab, remember you are already doing this. I want to see somebody in Trader Lab win this because you're already doing screenshots and building case studies, right? So let's get on with that. Oh my goodness, who is that? Sorry about that. It's a little frightening, isn't it? That's me. And I got a little bit of tan. That's from being down here in San Miguel de Allende for Day of the Dead. A very special tradition here in Mexico where they honor their dead, and it's a celebration of their, so they say, their family members all the way back and friends who have passed on. So they don't mourn them here. They celebrate their lives. A very beautiful tradition. Now, this is the RTH. This is our breakout of the consolidation and new all-time highs. We have a gap here. We don't want to forget this. And this is the retail price here. We have another gap here. So all of this is not auctioned. At some point, again, who knows, we may return. We will. I can make a statement. We will. Now, where's the some point? We don't know. So we're not in the prediction business. We're in the structural business. There are sell stops here. And this is yesterday's RTH, sell stops over here. Now, I drew a profile. Now, what is this volume profile? The volume profile just lets us see inside the behavior. In other words, what's too high, what's too low, and what's fair. And 6908 for these 2 days, since they overlap, you kind of can see them like one day, but there's 2 auctions that take place in here. Let's look just a little bit closer so you can see what it looks like. There's your gap. So this price, 6908, is the retail price. Think shopping. I'm not paying that. Yeah, but it's on sale. And then down here was our retail price from yesterday. And if you guys remember, we had something called responsive selling. So in the morning it was shorts, and the primary target was here. So we had a gap yesterday, came down, and this is like shopping. If we find a price that's too high, and at the time it wasn't up here, it was maybe over here someplace, and then we test and we find a retail price. Remember, in the store, if you can't buy your can of tuna down here anymore, we can reject it. And it's like going back to the store and going, oh, there's a can of tuna on the back of the shelf they didn't change the price on. But if it's too low, they're going to run out of inventory and the price can come back. And that's kind of what it did yesterday. And we had something called the neutral day yesterday. All that is first hour's high, first hour's low getting taken out. So we took the low first, and then we found our buyers, price too low, and then we went up and made new high. And then we closed pretty much in here. Now let's go on. Now grab your context grid sheet. What is this? Context grid sheet. If you're in TraderLab, the idea of the TraderLab is to help you develop an understanding of market mechanics. And by the way, guys, there's no prediction. So let's get over being right and knowing what's going to happen. Okay? So let's take a look here. Grab your grid sheet. Everybody in TraderLab and those of you who are in YouTube, if you have visited the TraderLab, get your grid sheet out. This is going to help you understand the condition of the market. Not predict, help you get a sense of the condition, because the market is not one-dimensional and not mechanical. So what we want to do is have a sense, what is the condition, and then potentially align our trades with the current developing condition. I hope that makes sense. So let's look here. Let's look at the language of the market. We are opening. Hold on. Got to get this together for you just a moment. So we're going into the RTH open, okay? 8:30 Central Time. And here's yesterday's high. So we're in range. Here's the open. So we're opening higher inside of yesterday's range. But, and here's the but, outside of value, wherever it is. It's down here someplace. Can't find it. Guys, where's the value area low? I think it might be covered up. Is it like 33 or something like that? Oh, wait a minute. I don't know where it is. I lost it. Oh, value area high. I'm sorry. So value area high. So what we're doing is we're opening in range, so higher in range above the settlement, and we're opening outside of value. Now let's get to our grid sheets. And why am I doing this? Is this boring? How about this is what trade plan is? This is what gives you an edge over the video gamers who are retail traders and they're just playing the games. I'm not into the game. I'm into business. You're interested in the business of trading? This is what it takes, in my opinion. So we're opening in range. Are we in range? Yes. Are we in value? No. What does it mean? This is off our grid sheet. Market is slightly out of balance. What do we anticipate? An overlapping or normal variation day. So what does it mean? Are we breaking out of the prior day's range? Yes or no? Well, first of all, and we know we're in a market that's going higher, a higher time frame bull market. Now let's go to our statistics. All of this is before the first trade. So we're opening higher inside of yesterday's range. So there's a 98% probability, take out the first hour's high or low. I'll pick one. And let's look. Getting to the previous day's high or low, 82% probability. Well, I don't know about yesterday's low, but I think maybe yesterday's high. What do you think? You think it's possible? I do. And how about the ETH high? 76% probability. Where is that thing? It's down here. You know, I lose at these levels. They get covered up. There it is. ETH high. What was that? 76% probability. The overnight mid, 75% probability. Right there. Previous value area high, which is there, 72% probability. So initially, my thing is, okay, we're looking for longs. Now, part of the thrill is where, how, and we're all willing to take stops, right? You're not? Sorry, wrong business. What do the casinos do? They pay the gamblers. So what do we have to do? We got to be willing to pay the gamblers, and they deserve to get paid. We need them. We don't like paying, I understand, but what business doesn't have overhead and cost of production? Have you ever found that one? By the way, if you do, let me know, because I'd be in that business too. But it doesn't exist. So if you ran a grocery store, you're going to have to pay bills. What business doesn't pay bills? And most of us identify losses as a validation of our intelligence or self-worth. It's not what it is, guys. So How do you experience a loss, though? It's an emotional event for us. I'll tell you, for the casinos, it's not an emotional event. It's cost of production and overhead. Because the only way they get a net, like any business, is to pay their bills, pay the gamblers, and if they have an edge, it comes to the bottom line, right? So, RTH open, jaw on the floor. Let's look. Now, what do I know? Let's go back to our grid sheet. We're opening higher inside of the range. We have yesterday's high with a high probability and the ETH high. So we have a northern or upside lean. And now the first trade is to look for a long. And I said to the traders in Trader Lab this morning, because there's always confusion, of course, because of randomness. I said, we'll do a case study right here in the stream on this first trade. Okay? So let's go take a look. So this is called developing volume point of control. What it represents, now remember, auction market theory, and I always think of Igor in the corner and with the electrodes and everything going, but the theory of the auction and why we have a market is to figure out what's too high, what's too low, and what's fair. And this process of discovery of valuation is the fundamental reason you have a market, and the tool to be able to organize this information is called the volume profile. And all it is shopping. If you know how to shop, you already know how to trade. You just, in the store, the prices don't change much. But when it goes on sale, if you perceive it's below a fair price, you throw 4 in the shopping cart. This is the same, except it's changing and auctioning in real time versus the store. Once you understand your shopping, now what you want to do is you want to determine where is a price too high, where is a price too low, and this dynamic process is taking place in all time frames. So therefore, that creates our challenge, is to discern the more micro structure. So here we go. RTH open, and remember the statistics favored the upside, okay? And we have FOMC today, so I'll put a little spice in the thing. But we don't trade that. Right now we're trading the perception of valuation. So we can come up with all the rational reasons for the market to do something. And of course, at times, that's right. But doesn't the market already know that the FOMC is today? Right? So if we know that, then we have to trade what the participants tell us, because we're not making this up. We are trying to align. So right here is the first interaction between buyers and sellers. This is absorption right here. The red delta, and there's 27 sell stops coming out. Thanks for playing. They get a coupon to the buffet. Now, absorption. Buyers are here. That's what absorption is. And the sellers are here. Why didn't it go up? Because the sellers. So now the market's going down, and I'm going, I don't know. What do you know? I don't know. And I'm sitting here. Now, here's what we do know. This is the first retail price. If I leave it, it is saying in micro, now we're in here about 20 seconds. Now, I'll tell you, in 20 seconds, I blink twice, and, what am I going to do? I'm not going to do anything. But I know if I have sellers here, now I'm in micro, that there might be buy stops up here. So opening swing high. So far, well, let's look. Market's going down. And I'm thinking, let me tell you what I think, and what I feel. I feel I'm missing the trade. I'm feeling FOMO. Why? I'm wired for it. By the way, any of you own a dog? Have you ever noticed that if a squirrel or something, or even a bird, the dog sees it and then it runs, and the dog lunges for it? That's wiring in the dog. And you might call it FOMO in the dog. We're the same. FOMO. So we feel it. Now, the difference in trading is to learn to, you can't stop feeling it. You have to understand where it comes from and not respond to it. So we all feel those things, and we all do the things not in our best interest, like sell this. Oh, I don't want to miss it. What is that? I don't know. Me? Not so much. So what I know is, I've got my open here, I got my selling, and what do I know? If there's shorts in here, then there's buy stops in here. Now I get the reaction. Now I'm looking for it to come across. And overnight mid, right here, let me give you this statistic. In all statistics, you must vet for yourself, has a 75% probability. So I come out here. So I'm now hitting right here a target. Now, right here, again, no clue. Watch. Now, this is the retail price. I labeled this, I call it a variable high volume note, just so you know. I made it up, and all it is we're shopping. And if this price is too high, remember how the store works, and if we want to sell the product, we're going to lower the price, so you'll throw 3 in the cart. But I'm at a location with a 75% probability. Now the market rotates up. Right here, the developing volume point of control shifts lower. What does this mean? Now, this is the language. It means this price might be too high. This is the new retail price. So there's a couple possibilities right here. If the new retail price is too high, we can bump off it and continue lower. If it's too low, I can bump off it and continue higher. And what do I know about this? It's the opening swing high. What might be there? Buy stops. So if these sellers have their buy stops trailing because it's going to zero, I'm looking at getting aligned because I open where? Outside. I open inside a range, outside of value. And what does my grid sheet tells me? The market is out of balance. So as long as I'm outside of this value area, I want to be long. Problem, of course, is where do I get long? Of course. So let's look. Remember what we can do. Right here, if this is too high, I can come down. If it's too low, I can test this. Watch. Now, this is a case study in a long. Let me show you the long. When I break above here, right here, this is a long. Right here, right there. Pull back to the variable high volume node. What's the language? I'm not paying that. Yeah, but it's on sale. Resistance is right there. Now, this is it's advanced, but you can learn this. And I mentioned this morning in Trader Lab, I was going to go into this, make it a little case study for you guys. All the pieces have to be in alignment. So what do I know? 75% probability, got here. What do I know? Opening swing highs there, buy stops are there. What do I know? I'm outside of value, but inside of range. What else do I know? Yesterday's high has a what? You wrote this down. Is this boring? Then this isn't for you. I'm going to tell you. No offense to anybody. What is the higher time frame trend? Up. What's the probability of taking out yesterday's high or low? 82%. I don't know about you. I'm going that direction. What do you think? Let's keep going. And what about that ETH high? So the long is here. The scale is here. Then the next target is, for me, was here and then a runner. Okay? I mean, that's just sort of the way I operate. Not saying it's a good idea, just saying it's an idea. So going for here, then going for here, ahead of this liquidity, and then wherever, the wherever is, I don't know. Do you? I don't know. So I have no clue. So I just know the runner is exactly what it is. It's, I don't know. So let's watch. VPOC migration. Let's come back to the language. Too low. What is this? The new retail price. Let's watch. Now, where's my outside edge? Out here and here. Too low. Variable high volume node. Variable high volume node. New retail price. This now, remember, we're shopping. Let's watch. So here's the thing with this. What we need to happen here is if I break under here, look at the opposite behavior. I break over here for the long. Now, if I break under here, I need to hold mid VWAP and down here. If I get under here, then say la guerre, we'll catch you later. Also, this out here, now I'm getting into some multiple ideas for you guys. This is called the low volume node. And what it is think of this like shopping. This is a store. Oh, it's too expensive. Yeah, but it's on sale. And the retail volume or high volume is right there. And this is like going to your mini mart. You know, I just look at it this way. So the volume is there. Watch. Break away. The buyers were there. You can see them here. Market goes down. Now right here, I have less buyers and the market's going lower. So right here, the market's still going south. See you later. Here, watch here. This is delta divergence. So right here, and it's not clear here at all. So right here, I get my buyers. And I've got a location. Subject to your understanding, when we break above this, so we have too low in here, no clue, because the sellers are there. I'm taking you down. I'm just showing you something here. Break high, subject to your plan, you could be long there. Now, for me, since it's the open, I know this is too high, but I do know my opening swing is here, and I do know I want to get long. But I'm not that aggressive. I'm more patient. I want some protection. So my protection is now this. Because why? Sellers were here. Sellers were here. Going to zero. Buyers take control there. See the change? And now I come back and where's my support? It's right there. But where's my resistance? It's here. And this is my opening swing. So for me, I didn't take the long till here, but right here, I was already mentally ready for it. Just saying. Now let's come back here. I get my rotation. Now this is my outside edge. If this is too low, this is too low, because it's an auction. I'm going, on sale. I'm not paying that. Retail, leave it. You see, this is where my opening swing high was. If I get above it, now I have a new auction. This is the outside edge. This is now my support. Let's go just see what it does. Outside edge. Variable high volume node. VWAP mid. Under here support. Okay? So break low, teeth chatter, going for yesterday's high and out the top. Yesterday's high and the liquidity. So this is the next target. And then wherever. Once I'm outside of yesterday's range, I have no idea. Do you? No clue. Watch. Now, what happens here? What is this? Let's come back from the other direction. Let's look at microstructure. I'm using this process. So what I'm looking at like here, high volume, break low, resistance. If I get above it, this, and the trend is up. So my outside edge is here. This is my resistance. This is what was my probability? Yesterday's high? Well, an 82% probability to take out yesterday's high or low. And currently, I'm not looking for yesterday's low. You? And then one, as we say, for the breadbasket, because I have nothing up here. So now I'm looking for it to go higher. But let's watch. VWAP. So all of this, as long as I'm above this, I'm okay. Because this is now I'm not paying that. Yeah, but it's on sale. And I also know, here's what else I know. Right here, this outside edge, 40-ish, sell stops, retail trader behavior. Here. So right here, this is very vulnerable. Let's watch. Sweep says higher. This is a tool, order flow tool. These sweeps say higher. Now, when it says higher, it doesn't mean it will. Here, sweep, what does it say? And I like to see them on down rotations. So like this sweep is more meaningful for me. Up, sweep suggests up. And if the retail price is too low, it suggests I can go higher. Remember where my support is. It's out here. Now, what do you see here? Sweep. What is the sweep? Now, these say upside rotations. This says downside rotation. Sweep. What does it say? Upside rotation. What does this one say? This one says downside rotation. Watch. Now I'm going for the ETH high. Now for me, I took my next target here because I saw this right here. I saw this resting liquidity. Now I know this has a high probability, but I'm a little more interested in getting my risk off, getting a little profit in the hopper. That's just me, you know. Liquidity trigger, resistance, break high, becomes support, and high volume of support. Remember the shopping experience. Break high, another sweep. So right here, so I'm doing a similar process. These high volume areas are the shopping experience. Remember, I'm not paying that. Resistance and support down here. Oh, it's on sale. Retail, the store, the store, the store. Mini mart, break high, too low. Now what? Sweep, too low. So support is here at this point. Break, done. This is my outside edge right here. So assume when I fall out of this, my trade's over, and I'm going, I don't know. Do you? No, I don't know. Let's see. So now it breaks down. Now I'm not off the longs. Here's why. My grid sheet says, are we outside of the previous day's range? Yes. So fading at this point is not valid for me. So I'm still looking for longs. So where's my support? Well, it's going to be here. Let's see what it does. And yes, it is. Fine. So now I have this right here. This, I got to label this, is my support. Because, well, here's why. Too high, too low, break high, support. So support's at yesterday's high. All right. I'm stalking along. Going, all right. As long as I'm outside of the range, I can be looking at longs, which is this. Okay. So I'm now looking again because I'm taking the stops out of what's in the swing. I'm looking again to get long. Okay. I come out here, right here, and I'm thinking to myself, well, this is a bit testy. And I know now I've got longs in the market and I'm back inside the range. So I start getting challenged, you might say, mentally challenged because I have conflict. So I know right here, that if, and I'm coming outside, when I come out here, everything gets questionable right here. But I'm outside of range. I'm outside of value. The only problem I have with this is I now have longs in the market. And if there's longs in the market, we can take them out. So in here, I take a shot at it right here. And I'm thinking, well, I can come back here. I took this because I have the sweep at an outside edge, and I'm looking to come there and to rotate back up. So that was my trade. I took this one right here. I got long in here. This is mean reversion, and I'm looking for it to come out. So I got one off, and then not so much. Here, once I can't get over this, and this is the failure here. So right here, this was okay, and it was very mixed for me. Probably, it's only because of my plan, because I'm still outside of value, and counter rotation would not be unrealistic. Anyway, here to there, ahead of there for a scale. So, pretty tight, but enough room for me. And then looking for it to come back outside of there and continue and come out the top. And look what it does. It comes right out here, and I need it to come out, okay? Doesn't do it. So, I get risk neutral, and then I get taken out of it. But this is the key thing. Now I'm back in range, failed to get out, and now I want to turn the barge around. So now I need to get short because I failed here. Okay? So now I turn around, I get short. Let's look at it. And where am I trying to go? Over here. So once I broke down and I got under here, I turned it around, and this is a short. And here's what it looks like. Now this gets a little more tricky because the longs are here, you see. So that was the last long, and to take out yesterday's high. So that's a failure. Now, if I go back to my grid sheet, it says, what does it say? Is the market responsive? Well, now it is, because I'm back in the range. Is the prior range holding? No. I can still fade. Watch for rejection and test of the previous value area and close. Previous value area is here. It's on my grid sheet. Once I fail this, I can then get short, and I'm going for this. So this was the short. So I turned around, I got short. And where am I trying to go? Here. Back here. Let's watch. Here. Now, there's another trade that sets up. So this is the actually it was over here somewhere. I can't remember actually where this is. Guys, where was the IB low? Is it covered up? Was it 37? 69.37. Oh, I think it's over here. Can't remember. Guys, was 36 quarter? Is that right? Okay. So this is the target on the short. And so that trade, and then value area low. So I had this trade, and this is all posted in Trader Lab, and I'm only going back here because the value area high, let's go back to our statistics. Now, this, you may find this like so much work. Well, this is about edge, right? 72% probability to get there. So once the longs were stuck, then it's where's the fuel? So it's IB low, which was the target, which I think was what, 36.25, and then the next one was here, this. So that's that. Now we have another trade in the Trader Lab called the IB failure, and I made these things up years ago. No idea. You make name. It's only from research. Now, the 36.25. Let me make sure I got this right here. Where was it? Yeah, once I got this, which was the target, then it was a long. Now, why would I take a long? Sometimes, I ask myself the same question. It's just because of my plan. Because if I stay outside of value, I can then come back and check the retail price here, which is this high volume up there. And this is called the IBF. And let me show it to you. And this I posted in Trader Lab. Now, this is a reversion trade, which means long. Let's look at it. Now, I'm going to show you something else a little advanced. So location, no clue. By the way, when I see this, my jaw's on the desk, same as yours. So, but here's what I know. This is an order flow trigger. Support, breakdown right here, resistance. You can see it, how it behaves. Target, now resistance, target, outside of value, break high. And then 36.25 is that IB, I believe. And that sets up the IB failure, which is a reversion trade to come back to the developing volume point of control. So that's long. And the idea is to come up here. And it had a real hard time with this because it has to clear this. Think of it this way. Too low, retail, outside edge. And then it's doing this. If it can't get up here, it can fall out the bottom. So the trade, initially, I was looking to come here. But once I got the sweep here at this outside edge, I started getting somewhat uncomfortable because I said, if I can't get above this, this now can become my fair price, and this is too high. So what I did, and this had something to do with that also, is as I started chopping in here, I took one off. And then the next one was to come here and maybe rotate up. Where's my support? Isn't it here with the order flow trigger? Watch. Now, all of this is before the first, 10 a.m. Central Time. Market opens at 8:30, so this is an hour and a half of trade. So this is the order flow trigger. So if you're looking at statistics, this right here is support. Break below, it is resistance. See how it behaves right here? It's resistance right there. Break high could be along here. And then you're going for here, actually, for the mid, because we can anticipate mechanical sellers here. So we have to get through the 41. And I posted this in Trade Lab. We got to get through this thing. And if we can, then we have this and this. And then whatever happens from there. Watch. So just look at the behavior. Another long is here. And then you still got to get above this 41, 40 because of the sweep. Support. I have to tell you, I'm sitting here and, just about every minute I'm ready to throw myself, out the window because my fear. Oh, I'm going to get stopped out. Oh, I'm definitely getting stopped out. Where's my support? It's right there. It's order flow. And where am I trying to go? Back here. Where's my obstacle? VWAP and mid. What do I anticipate? And I posted this in Trade Lab. Sellers. So what am I going to do here? Well, I got to get my risk off, which was out in here. And then if I can hold this, so I'm now scaled, and if it takes this out, then the whole thing is over. And then I have to scale again ahead of this because I might get the sellers. If I get the sellers, then either this is going to, hold up or it's not. And that part, I don't know. So this is my support. I come down here and now I have a sweep that suggests counter rotation. I don't have a long anymore because I'm under the IB. This is called the IBF, and it was over here to come back there. Reversion. Support, outside edge, resistance, breakthrough resistance, next layer. Can't get there. Hasta la vista. Thanks for playing. Why is that significant? Because I'm inside the range. I've taken out the first hour's low. And if I get under here, then it can get nasty. And that's it. So that's it for me. This is primarily the trades I had for today. Okay. So it was longs, and then a short, and then a long, and that's all I've done because I haven't seen the rest of this. Do you guys have questions? Now we're inside of yesterday's value. This still suggests we can go lower from here, but you have to have trade location. Here, remember this, if we can't get back to VPOC and we can break below, now we have a couple of trades here. One is called the IB continuation trade. And this is very tough location. Here's why. Liquidity is here. Sweep. Sweep says counter rotation. You now have this liquidity on the other side. You have an outside edge out here. I would just sit in the Barca lounger here, personally. I find for me, if it's not clean, Mechanically, this is a short, but this is much more scalpy behavior here. There's going to be stops when we break from here. So this was our support, and we come up out here. This sets up a potential short from out here. And then, once we're inside here, potentially we can go here. But you have to have a trade management process, because this can just come back there and do one of these things. Rotational trade. So if you took a short here, and this is a structured trade, you have to get risk neutral. This suggests problem, potentially, because you're getting an outside edge with a sweep, which can suggest a rotation. So if you take this trade here, and this is a short, you must get risk neutral, and then you just hang out because you're going for this. Now, the probability of taking the ETH high and low is not high. It is about a 33% probability. Getting to that naked volume point of control is also not huge. It's about 68% probability. And remember, the higher time frame is up. So if you take the trade, the IB continuation trade, which is here, and remember this trade might be over. I have no idea, but you have to have a trade management process. So the key in trading is risk management, job number one. Everything else is random. So if you take a short here, which you can, you have to get risk neutral. You would be. You've got about 6.5 points from entry, which is here, or any of these. But there is a trigger to there, and then that's it. And the trade, if it comes back up here, it could scratch, and you're out of the trade. And then you're just going to hang out in your Barca lounger. That's pretty much the way this works. And then that's that. One trade. Is that making some sense? Are you guys tracking? This is one way to do this. This is not a video game. It's just probabilities. And then it's either the trade works or it doesn't. You take your stops like the rest of us, overhead and cost of production. But if you have a statistical edge, you know where the trades might show up. You know the condition of the market that qualifies the trade. And then no matter what you do, still the outcome is going to be random. Remember what we have. We tested inside of value and we're coming back outside. So this is a very mixed market. The outside edge of this distribution is out here. Stops are up here. So if this counter rotates, the stops are above here. Also, if I get into this, which is possible, I'm going to squeeze. I look at this. Remember, the market goes up to go down. So what does that mean? Market goes down. There's buy stops above the swings. And what is this? This is a weak high. It's a weak high. So I anticipate, not predict, market's going to take these out and potentially come up here. And then either we get these guys, and this is reversion. I don't have a trade for it. The IBF is a reversion trade. So, but this is the outside. So you have to decide if you're going to get long here to squeeze that and to squeeze them to come here. We'll watch it, okay? Remember, when you're looking at the market, you cannot be myopic. You always have to think about where's the buyers in this leg. The buyers are in here. That's the buy stops. Over here, buy stops, retail trader behavior. Write this down. Think like a retail trader. Don't act like one. Where else are the stops? Here. So that would put this on the hit parade, not a recommendation. Let's see what it does. Remember, I don't call trades. I take stops, you take stops. Take your own, don't take mine. I take them just the way it is. Emotionally, I feel the same thing you do. Disappointed, angry. They did it to me. But I found out over the years, if I get picked off, like my stop, like if I put my stops here and I get taken out and I feel like and feel emotions that I'm a victim, I'm only a victim of my own lack of knowledge, not a victim of of someone trying to get me. Why? Because I know there's stops here. Isn't this where you would put your stop if you were short? And isn't this where you would put your stop? Mid? Are you mechanically going to sell the mid? I'm not. And I don't care what it does. Why? Because I'm testing this area and I'm coming outside of it. So I know there's stops here and I can anticipate mechanical retail traders right here. That's why I always say to traders at Trader Lab, you have to anticipate this behavior. So even though this was the target, the reversion, I can anticipate mechanical retail traders. Here's the other thing I can anticipate. Their stops are here. So if I take a long to come back inside, and for me, there's no range if I'm trading structured trades here, I anticipate they're going to get taken out. It's not a prediction. It's an anticipation. And I anticipate it because mechanical retail traders, remember the gamblers, they get paid. They have their stops there. You would have your stop there. I would, wouldn't you? Well, why would I put my stop there? Why wouldn't I manage my trade when I have tools that are order flow oriented and I see the sweep would suggest the counter rotation? Why wouldn't I cover my short if I was short when I come across this volume right here? This is the shopping experience. Too high, too low, outside edge. Off we go. Where's my fuel? There and there. Again, I'm not saying take a long. I'm saying why would I be short? And this might be the trade of the century to go down to, here. But my target potentially is there, and it could do that when I'm inside of value, but I'm coming in and outside of value. If I get inside value, I could go here because this was the fair price from yesterday. If I'm coming down and all I'm doing is testing value and I'm finding my buyers. If I'm outside of value, I can come back here. So I got two issues here. I can do this or I can do this. What do I know? The buyers are in here. Who are the buyers? Buy stops. Is this logical? If what else? I'm not paying that. Well, what's in the low volume area? Stops. And then this is too high. So I can just come out here and rotate there, one possibility. But since the stops are here and here, my experience, not my ability to predict anything because I don't have it, suggests here. And then who knows? Is everybody with me? How are we doing in YouTube? Hope you're getting something out of this. This is really Trader Lab. And the idea of Trader Lab, and by the way, I lose the chats and I just got them back, or at least I got YouTube back. I'm on a laptop and I got to tell you, sometimes stepping on a rake is a little more pleasant because I lose these chats. There we go. Okay, how are we doing in Trader Lab, guys? Are you guys tracking? Market mechanics. Remember what the market does. Market goes up to go down. Market goes down, sweep to go up. How do we go up? Buyers. Where are the buyers? Here. Who are the buyers? The shorts. Market's rotational. How do we trade rotations? We have to take the other side at locations. Now this could be a long for advanced traders. And what's the catch? Outside, sweep, jaw on the floor, possibility to go here, but I got my reversal back inside outside of the value. What does that set up there? Or not? But at least, I don't want to say at least there, because that's where the stops are. The reason we put our stops there, guys, is that prime wiring, risk avoidance, and FOMO. I don't want to give it back. I don't want to give it back. And by the way, you will give it back on a random basis. But if you knew that over time, not this specific iteration or interaction But over time, that these guys would get picked off, and you know that we will get potentially more selling here. What would you do? Would you scale ahead of this because we anticipate sellers at the VWAP, the mechanical sellers? And don't forget, the sellers over here got paid. And there's other days they don't get paid. But what I know is this yellow line is the highest volume. Now, what I have to be careful right here is the volume here is 12,300-ish. Up here is 12,400-ish. If this yellow line shifts down here, it is going to suggest maybe that this is too high. I have to be very careful right here because remember to shop, there it is, the shopping experience. If this now is the retail price, I can still come back and check this, or I'm going to push off right here. So right here is a decision moment subject to your trade plan. Let's watch the behavior. Remember, my stops are here. This is my variable high volume node. I'm not paying that retail. So it's either going to go there or squeeze first, and then this is resistance. Let's watch it together. That's a developing volume point of control. Delicate. Now, remember the language. By the way, guys, I don't use indicators in the traditional sense like you guys do, oscillators and all this kind of stuff, moving averages, trend lines, all. It doesn't matter. You can do whatever you want to do. What I found is, for me, over the many years, it's trying to make those elements work was they all have random winners, but I didn't have an edge because I was trying to fit the market in a box. Instead, I found that since the market's dynamic and changing, I need to stay in alignment, and certain trades that work under certain conditions don't have an edge in other conditions. So would you trade anything that doesn't have an edge? So what is this? This is language. What we're doing is we're shopping. So remember, if you go to the store, and now here's my VWAP, what do I anticipate? Mid VWAP mechanical sellers. And they may be right. So this is my area of retail. And if this was up here, I'd have a better shot. So right here, I can exit this trade, and this is not a recommendation, or I'm going to leave a runner on to squeeze. And so it can be over right here. It doesn't matter. Remember where my outside edge is. It's out here. This is now the retail price. This is too high. So the possibilities are exit stage left, or you're taking the risk to come back and check this. Is this really too high? This is subject to your plan. And I'm giving you the options. I'm not giving you the recommendations. Some traders are going to just be out of this thing here and not care about this and just go, well, okay, this is all right. Or let me give you the or they're going to keep their stop out here, under here, for the squeeze, which is the right answer. I can't tell you. This is where your trade plan comes in, because I can't predict what it'll do. I can tell you what it might do. It might come here, here, and come back here. And that's because of the stops. Or it'll never get there, and the sellers will come in and front run it because there were sellers here. See the icebergs? And if they think this is too high, they may sell. If we get buy stops up here, which is liquidity, they may be going, oh, really? Thank you. Let me sell some more. And nobody knows. So this is critical as far as, do we push up? Do we push down? And all I can tell you is what it might do. I can never tell you what it will do. Neither can anybody else. So, unfortunately, we're not in the fortune-telling business. We're in the business of maybe. I was starting to say I don't use indicators. This is a foreign language, okay? Language, guys, and understanding how the market works. How does the market work? The market rotates. What is it doing? It's trying to figure out what's too low, which at the moment is here, and it's trying to figure out what's too high, which was there. But what else do I know? There's buy stops there. Write this down. Think like a retail trader. Don't act like one. Where did they put their stops? Here. Oh, I don't want to give it back. Of course not. Well, how about this? If you know everybody, well, retail traders, most of them do not sustain themselves in the business, have their stops here. Why would you leave your stop there? Wouldn't you want to use other tools like order flow to potentially suggest counter rotation? There's the sweep right there. And the microstructure is here. Buyers were there, sellers were there, going to zero. What do we know? Well, sweep, sellers, lower price. And what is this for you astute indicator traders? Lower price, less sellers. Isn't that divergence? Sweep, resistance is here in the microstructure. Break high. Now your teeth will chatter. Support, and you're looking for it to fall out the bottom. This is your resistance. Support, no clue. Break high. You're getting above this. You want to be out of dodge. Oh, yeah. Where are those stops? Where do we anticipate mechanical sellers? Here. If I can squeeze these guys, then I got this. Or I can be out of this trade. You can just be done with this and not even think about it. Is this useful information? Not predictive. This is language. It speaks. Do you guys ever tried to play a musical instrument or learn a foreign language? That's what this is. This is a language. Your indicators are like Google Translate. The problem is they're one-dimensional, and like all indicators, they all have random winning trades. So I found for me, and I built trading systems, was because I was trying to get these indicators to be statistically viable. So I was always curve fitting. And when you guys go back, you're doing the same thing. I just did it with the computer because I thought it could do it better, and it did it much better. The problem is it didn't solve the problem. It just took the problem and just manifested it in a different way, which is operating in randomness and just trying to curve fit. So I could always go back and then do walk forward testing, but I was solving for a market that didn't exist in the present. It existed in the past. Now, again, I have to stress to you, when I was managing money, which is when I was doing all that, I'd have runs of winners, and I'd say I'd have it now, and I built a schedule of taking, like, I think it was a month or 6 weeks of data, go back and optimize on the previous four weeks back, and then walk forward 2 weeks. So it was a total of 6 weeks of data, and no day trading. Okay, it was trend following. All right, so different animal. All right, but and now where the stops are here. Right, so I can be done with this. Why? I anticipate more retail selling. There's the buy stops coming out. But what else do I know? I got stops here, and this price is too high. So the possibility is to get these guys out. Check this variable high volume node. And again, I can be done with this trade in here. Okay? This is a reversion trade, and it's tricky because we're still here. I'm testing inside of value, and I'm rejecting it. That is somewhat friendly to the upside. And, so this is the nature of trading. It's not black and white. It's always degrees of maybe. So the best you have, guys, is maybe. Think about how the casinos operate, because that's our business model, and it's proven it works. And that is, they have control over how they play the game. In other words, they shuffle, I always like to think of blackjack. 7 cards, cut the deck, deal them, somebody taps the card, you hit me, blah, all that mechanics. So they play a game in a very structured, non-variable way. And that's called anchored inputs. I did a primer webinar on this idea, and it's got about 34,000 views. You're welcome to see it. It's in the Trader Lab. And remember, there's no cost for Trader Lab. You can use that link in the bottom of YouTube if you're inclined. And it's not about me. It's about all of us. It's a leveraged community of traders, all different various experience levels, years in. Our senior trader has over 50 years. I've got 46 of doing this. And you learn a lot over those years. You also spend a lot of time with Trader Groundhog Day, waking up in the same place despite working hard. Working hard with a defective process is not going to solve it for you. It's just going to bring you back to the same place. Winning trades. Remember, we always think if we have winning trades that if we just tweak it a bit, we can get more. It's the most logical thing going. But gamblers also have winning hands, but they don't have an edge. They do get paid, but they don't have an edge. And they are playing their cards randomly. So when you're sitting at the table, whatever card you get and all that's random. The cards that come out of the deck, ones that leaves the dealer's hands, those are random. All that is random. 100% random environment. We're in the same environment. 100% random, right? So if we can equate this to gaming, then we have to approach this like a gaming business, not this I want to avoid risk thing. Where's that come from? It doesn't come from the business. It comes from your psychological, emotional, primal wiring to avoid the apex predator. And when you're looking at this, you are experiencing emotionally and chemically the apex predator. I don't know what's behind the rock. Risk. Let's wait and be sure. That's where your thought of confirmation comes from. I don't know what to do here. FOMO. Oh, now it's getting away. I'm sure there's no risk here. Let me ask you the question. Who has more risk? When you have confirmation or someone who has a strategy with an edge who doesn't have confirmation? If my chance of this trade, let's just say it was a short, hypothetically, if my odds are good for this short, if it was, who has confirmation? You getting short here or me getting short there? Or you getting short down here when you're sure it's going to go down? Who has more risk, but who has more certainty? I would have less risk and the same uncertainty you would have. You'd be trading your psychological comfort and chasing it because of FOMO. And I had the same chance of taking a stop as you. Which one over time do you think has a better edge? Even though, so the edge is the same, but the risk is greater. My goal is minimal risk so I can preserve my equity for the trades that have maybe the same edge. But your risk, and this is not a good example, but I'm giving you the psychology of it. So we don't want to get long out here because of our fear. But this is the area to get long. Where would you get long? Here, with the risk out to here? Or would you get long in here with your risk out to here? Which one is better? You see what I'm saying? This is the fallacy of looking for confirmation. You have to understand the basis of why you make choices. It's because your primal wiring is influencing the choices you make when you approach a business of uncertainty. So you're going to try to create it because you need it because of your primal wiring. It works great for survival of the species, but that's not what we're doing here. We're actually instead of bending this business to fit what you need for comfort, you have to learn how to live in 100% randomness 100% of the time, which means you're always going to be uncomfortable with uncertainty. So the only way to get control over that fear that I have found is statistical probabilities. Think of it this way. If you don't have a probability or a tangible metric, all you have is intangibility. What is intangible? If you don't have something you can touch, like a statistic, then you have an emotion. And if emotions are driving the bus, you're in trouble. Because you're now doing what most retail traders do. And the probability of sustainability is substantially diminished. And I'm underlining the word substantially because you guys know the failure rate. Why do you think it exists? Because this is what most traders do. They're responding to emotional needs. If you don't have a statistic, all you have is your fear and your FOMO. That's it. Chemicals in your brain. So the difference is if you're in Trader Lab and you do the work, you can't just come to Trader Lab, plug and play. Doesn't work. You won't be in the business. Doesn't matter where you go. These tangible statistics, which would be in your book, your trade plan, give you control because you can touch something tangible. If there's nothing tangible, then all you have is emotions. How's that working out for you? Emotions don't work in this business. They're actually the liability. So if we understand that emotions, then we wouldn't be doing or letting the emotions, the fear and greed, which are primal. Remember the dog. The dog chases the fleeing prey, if you will. It's wiring. So if it runs away, you're going, oh, I shoulda. Well, no. Or here, I shoulda. Now it's certain. No, it isn't. There's more risk. And the trade, and this is not a vetted trade. This is nothing. The trade fails here. And by the way, I anticipate, not predict, it is going to go over this. Why? There's buy stops here. So what do I anticipate? Mechanical sellers, retail traders, right? And again, they get paid. This might be the short of the century going here. There is a statistical probability. What is the obstacle to going lower? It's this. Remember, this was a target on the short coming down, which whatever it was over wherever it was, somewhere down here, I think. So that was it. And this comes out, tests, sweeps. This sets up the long or not. Where to? Here. Why? Stops. Write this down. The market goes up to go down. The market goes down to go up. The market goes up to go down. The market goes down to go up. The market goes, whoops, somewhere. Hold on. The market goes up, all rotations and time frames, if you will, RTH, to go down. Why? Sell stops, sell stops, sell stops. Where's the buy stops? Here. Buy stops, buy stops, buy stops. Market goes up to go down, gets to shorts. Market goes down to go up. Market goes up to go down, get the stops. And this was a target. I won't go into that. This is Trader Lab. Market goes down to go up. Market goes up to go down. Market goes down to go up. Market goes up to go down. Take the stops. Market goes down to go up. Market goes up to go down. Market goes, oh my God, we'll see you later, to go up. Market goes up. Take the stops. Go down. Market goes down to go up. Market goes up to go down. Goes down to go up. Goes up, go down. Clean them out. Goes down to go up. Goes up to gap, and off we go. And what else might we be doing at some point? Market goes gap to come down and fill. Market goes gap, come down and fill. Market's now on a run, up, up, outside of value, right there. This was the retail price from yesterday, 25, and we're outside of value, and put a helmet on. This is how the market works. Now, I'm showing you rotations in the RTH. If you extrapolate this behavior, because it's the same in all time frames, that's why the market goes up to go down and goes down to go up. It goes down to go up in all time frames. And I don't think of time. There's no time here. This is rotations. So what we get off the clock here, you can punch the clock on the RTH and the ETH because they're completed auctions. But when we're in here, there's no time. There's only rotations and fuel. Where's our fuel? There. Where's our buy stops? Here. Where's our sell stops? Here. Why wouldn't we be shorting this? Because there's going to be buy stops. Where might we go? There. Is this logical? This is Trader Lab. And it's not a recommendation. You know, this is whatever. Whatever. This is traded. Who knows? You? If you know, come to Trader Lab. And it doesn't matter how long you've been trading or your process. Doesn't matter. What matters is you have a genuine interest in learning market mechanics, How does the market work? I'm going to suggest it does not work on your indicators. I'm going to suggest there's more to it, but it's not complicated. We think the answer lies in complexity, multiple time frames, multiple indicators. Throw the smorgasbord against the wall. Let's see if something sticks. It doesn't work that way, in my opinion. My experience is I tried that, unfortunately, for too many years. I shared an office with George Lane. He created stochastics. So early on in my career, all these indicators, Wells Wilder and all, were new. So I thought, gee, the holy grail is here. Look, the line crossed. Oh my, this is so easy. Oh, wait a minute. Let me draw that trend line. Look at that. It held up. Wait, it moved a little bit. Let me move the trend line. Oh, now it fits. You know what I'm saying? Trader Groundhog Day. Kept waking up in the same place, thinking I just had to make it better. What I didn't understand was the random winners are what kept me thinking I could make it better. I didn't understand that my process was defective. And because I didn't understand at the time I was in the gaming business, I thought I was in the curve fitting business and just getting it all to fit. Nobody told me when I started, everybody was a floor trader. I was like an anomaly. There were not off floor traders at the time. So we didn't have the technology. When I would put an order in, you'd write it on a piece of paper, timestamp it, pick up the phone, talk to your guy on the edge of the pit. He'd flash it in. You'd get your fill back. You'd write your fill on that piece of paper, timestamp it again. It was all analog. No domes, no electronic trading. Nada. So kind of started out that way. S&P started in 1982. We called them pinstripe pork bellies because it was the commodity business back then. So I started out with grains, if you can imagine, as a grain trader and trading grain spreads eventually. But I always had a thing for the financial. Anyway, just saying, it's not important to this. But this is kind of what over time, and I learned market profile from Peter Stottlemyre. He actually created it, and that was in the mid 1980s. And I learned this. And when you learn something, you tend to learn it mechanically because you don't really understand it. It's very rule based, So I was not successful with it because I thought I'd put it together with my indicators and then I'd have more. Actually, what I did is I actually set myself back a couple of years. And remember where the stops were. Stops are sitting right here. And notice the liquidity comes in. There's our sellers. Now, why might we think there would be sellers here? Because if the stops come out, the sellers that were here are going to go, oh, really? Bonus. Throw 3 in the cart, Tom. Okay. Sweep, potential counter rotation right here. Not saying it's a short. I'm giving you a sense of understanding market mechanics. So if I have a trade here, I'm not saying anything more about it. I know this is too high. I know my stops are here, 49. I know the icebergs, which I anticipate. If they think this is a heck of a deal, they're going to sell a few more up here. And now this is support. So if I don't have range, I don't have a trade. Okay. But I'm just saying is, how can I anticipate behavior? Because I understand how the market works. I can't predict the darn thing. I understand this is my outside edge. I'm not paying that. Retail. This is mean reversion. This is the mean. This is the outside edge. This is where retail traders keep their stops. Thanks for playing. They get a coupon to the buffet. And then potential to get under here and to come out here. And, wherever. That part is part of the thrill. Now, the conflict in this whole thing is we're outside of value. So this may or may not do anything. Don't forget we have FOMC and who knows, right? You got to wear a helmet for that. Are you guys tracking? How are we doing in YouTube? Are you getting anything from this? If you are, please give a like, hit the thumb up, pass this on to your trading associates. This might be helpful. I'm not saying it's not the solution. It is a potential solution. And the Trader Lab is for serious traders. I'm sure you guys have been in romper room over your, experience. That's not what the Trader Lab is. This is a high tier chat. It's open to everyone. There's a link in the bottom of YouTube if you want. You do have to confirm your Discord username. Keeps the spamolators out. Not interested in that. This is about building the business. You will have to roll your sleeves up, and you'll also have to overcome your comfort with the things you're doing now that are causing you not to be sustainable. It's very hard. It was very hard for me because when you spend 10 years with indicators, and I built my own, you have to understand, I went way beyond what most mortals do because I thought I could solve it. And all I did was I kept getting the same outcome. And it took me quite a while to kind of figure out that it was my process. So if you believe something, it's like anything you believe. Remember, ancient mariners believed that if they sailed to the horizon, they would fall off the end of the earth. This was their truth. They wouldn't do it. Well, it took explorers, right, and those who would take, quote, risk and manage their discomfort to sail to the edge, to the horizon. And guess what? They didn't fall off the edge of the earth. But because for millennia, most sailors believed they would fall off the edge of the earth. They wouldn't go to the horizon. So it took someone to deal with their discomfort, their fear. So we have to do the same thing in reality. It might be a poor analogy, but we tend to stick with the things we believe, even if they're not accurate, and it could be anything, right? So in trading, we are going to defend what we believe. And because we're familiar with it, and I think the paradox, if you will, or the conflict is everything works randomly. Remember, in the casinos, the gamblers get paid because they win randomly, but they don't have an edge. So we have to kind of understand the business we're trying to be in, and we need to understand the reasons that most retail traders have no longevity. And I understand you guys get out on YouTube and you listen to all the influencers and you see, the only one thing you need, and I look at this stuff and I'm going, what is this? Now, you've probably done it. So it isn't the next chat or the next easy, sure thing. Let's take our experience and let's acknowledge it doesn't exist. So if we can't solve for the sure thing, we need to solve for the random thing. The casinos have solved it. They only play games with an edge. So if we extrapolate that, we only take trades with edge, and we're going to, of course, pay the gamblers, then we can say, okay, I got a business. And now can I develop the discipline to manage my fear? And the statistics are the tangible part of this that can give you the ability to better manage the fear and to let go of the need to be right and to need to get validation of your self-worth and your brilliance. We're all ignorant. We're ignorant. What are we ignorant of? The outcome of the next random rotation or the next random trade. But what do we know today? We're outside of value. We've checked it, and this is a check. There's no precision. Remember, horseshoes and hand grenades. Do you want to be short? Not me. What do I want to do here? I want to get long. What do I anticipate? These guys. Hasta la vista. Thanks for playing. They get a coupon to the buffet. Where's my resistance? Well, this doesn't have to go anywhere past here, except, and I know I can anticipate sellers, and I know in the microstructure, the shorter time frame, this is too high. The trade could be done here. And then you're back in your Barca lounger. I also, if I can clear this, think of it like the shopping experience. I'm not paying that. Yeah, but it's on sale. Retail. If this becomes too low, I can come there and I'm above it, then I can go there. By the way, I don't know. And if I get outside of the range, it's back in the squeezeteria. Or you're back in your Barca lounger and you got your pizza being delivered. Does that make sense? This is Trader Lab. Nobody knows anything. The best you have in trading is maybe. Maybe it'll do this. Maybe it'll do that. Maybe it won't do any of it. Can you live in the world of maybe? Can you solve for maybe? If all you have is maybe, that's what you need to solve for. And it's going to be the hardest thing you ever do because you're going to be pushing back against your primal wiring that is seeking certainty and to avoid risk. Do you know what I'm talking about? This is why I created Trader Lab, because I spent too many years trying to solve the puzzle with being certain. And I had to accept at some point that there was no certainty. There was only maybe. Can you solve for maybe? I believe you can if you come to Trader Lab. And I'm not going to sugarcoat it. This will be the most difficult thing you ever do because you have to learn to read the music. And it does not come naturally to understand retail trader behavior. Remember, think like a retail trader. They sell the med. Don't act like one. Think like a retail trader. They put their stops there. Don't act like one. Use their behavior as an asset. It's always been our liability. Use it as an asset. You can join the Trader Lab community. There's no cost for it. You won't be solicited, abused, other than the abuse you drop on yourself because of our own behaviors, and we've all done it. We all tend to do it. Part of being human. But if we understand, we might be able to do better and maybe create sustainability in a career path. You can use the link in the bottom of YouTube. You have to confirm your Discord username. You'll get a code, so you can confirm it, and then you can join the Bookmap server. And there's a lot of additional education, all available at no cost. And you don't have to be a Bookmap subscriber. Not only does Bookmap invest in cutting-edge tools for order flow and understanding market mechanics, it invests in you, education. How do you work this? So how can you trade stocks, options, crypto? How do you learn how to operate with a high-tier order flow tool like Bookmap? How do you interpret algorithmic behavior, market maker behavior? Do you think that might give you an edge over other retail indicator-based mechanical follow the indicator traders who do not understand why this is a long, why the shorts might get squeezed, and the order flow to help you navigate and enter a trade before others are even conscious, you see. And again, you will take stops. We have to get over it. You want to be in business, you got to get that checkbook out and pay your bills, right? So now we have to change how we respond to our need to be right, our need to avoid risk. You can't do it being driven by your emotions. You can only control your emotions with something tangible, and that's a statistic. Please give a like, subscribe to the channel, click the link in YouTube, send it over to your buddies. This is the Trader Lab. This is about the business of trading. There is no shortcut, but we all wish there was. But if you've been waking up with Trader Groundhog Day, working hard, getting the same outcome in spite of the random winning trades, then it's not your effort. It is your process. Maybe it's time to kind of come up from underground, stick your head up and see, is there a solution that makes sense? That is, even though the environment's random, you cannot be random. You have to use anchored inputs. And based on how the gaming process works and the casinos have a profitable model, maybe we can use something that's already proven and overlay this process on a proven business model. Don't forget to give the like on the way out. Appreciate your time and interest. Thanks so much for visiting the Trader Lab, and I look forward to seeing you guys tomorrow. Be sure to review this stream if you got something from it. And also in the Trader Lab, it's a community of like-minded traders. There's a library of webinars, some up to 4.5 hours long of real-time narration, plus a document section, and of course, the community. Thanks again. Look forward to seeing you soon.